Hello, traders. It's Monday evening, October 19th, and this is an update to our current positions. The character of the market has changed pretty dramatically today, and I want to buy back our spread. So let's take a look at what the market is currently telling us. We had this nice inverted head and shoulders formation right here. We had the neckline right here. Everything looked fantastic. We had these true gaps where the low of the day was higher than the prior day's high. Everything looked great right in here. However, the market was a bit overextended on this type of a move, so a little bit of a pullback was perfectly normal. Now, on that pullback right here, these two candles, everything's still fine. We've got the nice upward sloping trend line. A little bit problematic with the trading last Thursday, but we were able to close back above that trend line, still well above the 50-day moving average. Okay, not too much of a problem because this would be a bullish flag formation if Friday had resulted in a nice green candle taking out that little downtrend. Then we would have been off to the races, possibly challenging the all-time high. That's not what happened. Friday, we saw some selling pressure. You could see this inverted hammer, and we closed back below the upward sloping trend line. Okay, still not overly problematic. Today, however, you can see we gapped higher right on the open, and we had a gap reversal with heavy, heavy selling during the day with a close on the low. We also are testing that neckline from that inverted head and shoulders right there, and we are within striking distance of the 50-day moving average. And I don't care too much about why the market is selling off. I've seen the price pattern, I've seen the behavior. That's all I really need. If I'm trying to justify it in terms of the news cycle, then we've got a couple of bullish possibilities. One is a stimulus bill. Nancy Pelosi, Steve Mnuchin say that they've narrowed the gap. They're closer to reaching a deal. But Nancy Pelosi has put a deadline out there of Tuesday. So tomorrow, if the market doesn't get the deal, it's going to sell off. It's that simple. Now, to this point, I've said, well, who cares? We're going to have the election in 3 weeks or so. We're going to get the stimulus bill anyway. The market will get its fix and everything will be fine. But that stimulus bill and the hopes of it are what's buoying the price action right now. It's helping the market to tread water. The other thing that's helping the market to tread water is that we have mega cap tech earnings coming up. Those tech earnings should be excellent. Well, some of those tech stocks are actually fairly weak right now. We've got antitrust lawsuits that are being discussed by the lawmakers in the United States and in Europe, so that's going to weigh on the results a little bit. We also have an upcoming election. Could be a lot of uncertainty there, particularly if we don't know the outcome for 3 or 4 weeks. And that's very possible given all the mail in ballots. If we go 3 or 4 weeks with unrest in the streets and no stimulus bill until then, the market is going to sell off pretty dang hard, especially when we don't know who's going to be at the helm. So that's another possible wrinkle in this market rally. We also have a hard exit likely in England. I can't tell you what that's going to do to the currency markets, but it won't be good. Again, lots of uncertainty. We have the coronavirus spreading in Europe. Most of Europe is shut down. A lot of major metropolitan areas in the U.S. are considering the same. In fact, going back to perhaps even shutdown levels that we saw in April and May. That would be devastating for our economic growth. So there are lots of unanswered questions right now, and I believe that this selling pressure is indicative of profit taking. So let's take a look at our positions. I'm going to put them up on the screen here, and we'll go through them one by one. There are some that we'll be able to buy back, and I believe we'll be able to reel them in without an issue. We did get filled on SWKS today. We got filled at 20 cents. Currently, the overnight S&P futures are indicating a higher open. They like the fact that Nancy Pelosi and Steve Mnuchin are still talking. So we should see a nice little pop on the open tomorrow. I want to take advantage of that pop, and I want to try and reel in every spread that we can. and we're going to try and reel it in at our entry price. So SWKS, it was very hard for us to get this trade off. Any kind of move higher, that time premium is going to come in dramatically because all of these spreads are going to expire in 2 weeks or less. So SWKS, that marked 22 cents bid, offered at 46 cents. We'll take a look at that. That was short the 146 puts, long the 145 puts, and we're going to go right down the list. We're going to take a look at these option prices. Sorry about that. We'll get that back on screen, and we'll put SWKS here. And we'll take a look at exactly where those options closed. October 30th, expiration, 146, 145. Going to click on the bid of the 146s, ask of the 145s. Now, as soon as you get these market declines, all of a sudden the option bid-ask spreads explode. They widen. See, it makes it even more difficult to try and reel these spreads back in. Given the fact that we're only a week and 4 days away from expiration on these, I think that any rally tomorrow in the stocks is going to collapse these premiums and we'll have a chance to reel them back in. Better to be safe than sorry. So you can see off screen that spread is a negative 22 cents bid offered at 46 cents. So the spread should be trading somewhere around 10 cents to 20 cents would be my estimate of the real bid ask on that spread. So we're going to try and buy that back for 20 cents. MCD, there we're short the October 23rd, 225 puts. We're long the 220s. We did that for a 50-cent credit. 31-cent bid offered at 65 cents. This one I think we're going to be able to buy back for a profit. Let's take a look at that. And this is actually for the expiration this Friday. So this is a very short-term trade. And we'll put that up. This should be a winner for us. So we'll be able to reel that baby back in. And we're going to the October 23rd expiration, buying back the 220 250s, and we're selling the 220s. And you can see that off screen, that spread is 31 cents bid offered at 65 cents. We put the spread on for 50 cents, so that is leaning toward the ask side. That's what we're going to try and do, is we're going to try and buy that spread back in. Let's take a look at McDonald's very quickly here and see how the stock did today. It pulled back off of that high, pulled back pretty considerably. I mean, we're still holding that breakout that we were leaning on. We're going to try and buy that back in for 50 cents tomorrow morning. With any kind of pop in the market, I believe that we'll be able to get filled on it. Again, we are going to err on the side of caution. I do not want to be out there. That's why all of our spreads expire before the election. We're starting to see some nervous jitters before we even get to that point. So we'll take a look at the next one, Microsoft. This one's a little bit of a problem. There we're short the 212.50s that expire this Friday, and we're long the 210s. We did that for a 40-cent credit. So let's take a look at that spread. And there we go. So we've got the 212.50s right here, and we got the 210s. And off screen, you can see that that spread is 61 cents bid, offered at $1.12. Well, it's going to be hard for us to buy that back in for 40 cents. We're going to try, and then if I need to update the position this week, I will do so. But for right now, we're going to try and buy it back for what we put that spread on, 40 cents. Let's take a look at Microsoft and see how it performed today. Tech in general was pretty dang weak. Here you can see Microsoft. We've got the 50-day moving average that we were leaning on. That is holding up right now. We're still on the halfway point of this long green candle. That's okay. Any little pop tomorrow, try and buy that baby back for 50 or for 40 cents. That was our credit that we put that spread on for. So again, whatever we put the spread on for, we want to try and reel it in. If we can buy back 3 or 4 positions and we only have a couple of positions on, I'll feel that we can shoulder that risk one way or the other, and we can make it much easier to manage the position. PDD, there we're short the 77 puts and we're long the 76 puts with an expiration of October 30th. That stock has actually held up pretty well. Let's take a look. And you can see how that 50-day moving average has been preserved, and you can see how the stock really shouldered the news well today. So let's put the option chain up and we'll take a look at those. And we've got the October 30th, 77 puts that we're short. And we'll scroll down, we'll click on those, click on the 76s, and you can see that that spread is 6 cents bid, offered at 21 cents. We put that spread on for 20 cents. You should be able to buy that spread back for a nice little gain, especially if we get a market pop tomorrow. I think you can probably reel this one in for 10 cents. So watch where everything opens up. You can put a limit out there immediately for 20-cent debit and you're going to get filled on it. I suggest on this one, you might want to wait a few minutes after the open. If the market is opening higher, that is. If the market's opening lower, then just put your limits out there immediately. But in this case, I think you'll probably be able to buy this one back for 15 cents or so. We'll go into the staged order entry screen. CLX is another one that's a little bit problematic for us. There we're short the October 30th, 212.50 puts, long the 210s. And we'll take a look at that. CLX is pulled back. There was a downgrade last week, but the price target for the brokerage firm that made the downgrade is still well above its current stock price, and it has a tendency to rally into earnings. That's why we were in the trade. So the 212.50, 210, there you can see that that is 70 cents bid, offered at $1.35. We put this one on for 50 cents. Put your bid out there and see if we can get filled on it. I'm doubtful we'll be able to. I think this is one of those spreads that we're going to end up having to manage, and I will provide updates on everything as needed. Still have the upward sloping trend line in check right here, and we'll put up the major moving averages, the 100-day and the 200-day. You can see we're below that 100-day. Don't particularly like that, so we want to try and get this one back in if we can on any kind of market pop tomorrow. You can see the earnings are on 11.3. If we're not able to reel this in, day by day, I'm going to watch the position and I will tell you what we need to do. We've got some time on these, and it could also be that we leg out of it. The only problem with that is that we're looking at option expiration on October 30th, so we don't have a lot of time, but we got a week and a half worth of time. So we're going to be watching this one very, very carefully. And go to the next one. Go into the staged orders here, and you can see DDOG. Now this one, you're going to be able to buy this one back for 20 cents. I'm very confident. In fact, most of you did not get in this trade. I'd say they're probably, I don't know, I saw about 40-50% of the people that posted said they were able to get into the DDOG trade. So let's take a look at that stock. It's been relatively strong. And there you can see that it's pulled back just slightly today, not much at all. And in this particular one, we're short the October 30th, $98 puts, and we're long the 97. So let's take a look at that one. DDOG and the October 30th, 98, 97. There's the 98s. There's the 97s. And so this spread you can see is a negative 15 cents bid, offered at 35 cents. So I believe the true bid, the middle of this is 10 cents bid. And at 20 cents, we're very close to the ask on any market pop tomorrow. You're going to be able to buy DDOG back in for a break even. So let's try and do that. Stock held up really well today. Stock still looks very strong. I like that one. I think that would have ended up being a really nice one. AMD, let's go down to that one. AMD, the October 30th, 74 put, 73 put. We did that for a 20-cent credit. Take a look at that. I hate reeling all these in. I took so much time and effort putting them on, and so did you, that I do not like having to buy these back. But we need to err on the side of caution. Sorry about that. I need to confirm the strikes here. 74, 73. And we'll click on that. Click on that. There you can see that we put that on for a 20-cent credit. That is 11 cents bid, offered at 25 cents. We would be buying that back ask side, meaning we're close to the ask. We should not have any problem buying that back for 20 cents, especially given a little bit of a higher open tomorrow. Finally, on Abbott, the only position that we have on Abbott, and I've had a couple of questions on this. Now, we sold the October 104, 103 put spread for 20 cents, and I'm going to use that 20 cents to offset the cost of this debit spread right here, where we bought a diagonal. We bought the Abbott October 23rd 110 calls, and we sold the 115 calls. We did that for a $2.70 debit. So effectively, we would be long the 110 calls at $2.70 because our 115 calls that expired on October 16th last Friday, they expired. So we're net long those at 270, but we also got a 20-cent credit for this bullish put spread. So our net cost really on the Abbott October 110 calls is $2.50. Everything was looking great for the stock today. Market opened higher. The stock was starting to take off. And then it fell to heavy selling pressure. We'll go into the 5-minute chart. You can see the nice start to the day. I was really getting excited about this one and trying to get through that 111 level, and the options were starting to kick in, and then it just sold off progressively throughout the course of the day. What we're going to try and do on Abbott is we are going to put a limit order in to sell these options at $2 tomorrow. We are going to sell the Abbott 110 calls tomorrow for $2. If you are not filled on that trade by the close tomorrow, you need to sell them at the market Tuesday before the close. So let me reiterate that. We are going to sell the Abbott 110 calls before the close tomorrow if we are not filled at $2. At this juncture, I'm okay taking a 50-cent loss on it. Stock didn't do what we expected it to. Market didn't do what we expected it to. They announce earnings Wednesday before the open. Tuesday is our last opportunity to exit this trade before the earnings announcement. Very important. Close this trade down before the close Tuesday if you're not filled at $2. So we'll go back in and we'll take a look at all of our positions here. I believe that SWKS, we won't have a problem reeling in. I think McDonald's, we will not have a problem reeling in. Microsoft is going to be a problem for us to try and get filled at 40 cents tomorrow. PDD, we're going to make money on that one. CLX, we will not be able to buy in unless we get a big move higher in the stock. DDOG should easily be able to buy in. AMD, easily able to buy in. Abbott, we're going to take a little bit of a loss on. So you should be able to make money on most of the spreads that we have open. And if I'm reading the prices correctly and the market correctly, I believe tomorrow, by the close, we'll have two positions. We'll have a bullish put spread on Microsoft, and we'll have a bullish put spread on CLX. Two positions to manage, given the market weakness that I saw today. That I'm not having an issue with. I think we'll be able to do that just fine and weather this storm. I don't like the price action that I saw today, and I'm going to put up the SPY. You'll be able to see very steady selling pressure. Now, the market was a little herky-jerky as it comes in and it checks the low from Friday, that closed right in there. And then we're trying to rally off of that, but not able to. Now, this is very telling of heavy selling pressure. When the market can't get off the deck and you have a nice little drop like this, usually you're going to get a little bit of a rebound, Not in this case. It was just a lid on the market, and every little rally attempt was squashed, and the market just kept drifting lower until finally we had this breakdown here, and then the selling pressure accelerated dramatically into the close. That's a problem. Was this just related to the stimulus bill and Nancy Pelosi saying that if it's not done by Tuesday, that's it, it's done? I don't think so. I think the market would be very fine hanging on until the election, knowing that Republicans and Democrats want that stimulus bill. I believe that there's something more to the market going on right now. I believe that it could be uncertainty around the election outcome, that we don't have a defined winner for 2, 3, 4 weeks. That would be really bad news. That would also postpone any kind of stimulus bill. I don't think the fact that hard landing in England is going to create chaos there. I don't think that's very good for the market. I think tech earnings are going to be pretty good, but overall, earnings year over year are projected to be down 20% for Q3. That's because of the second wave of the coronavirus. That also is not a very good earnings backdrop to be operating under. And then the final straw that broke the camel's back, Europe's in pretty much a full-blown shutdown right now for the major metropolitan areas. That's going to take one of the largest economic zones in the world out of play for a while, and the U.S. seems to be heading in that direction also, as cold temperatures force people to spend more time inside, and we're starting to see the number of new coronavirus cases increase. I think all of those factors are weighing on the market. If you throw in there that there is a chance that we may not get a stimulus bill tomorrow, and we may not get it until after the election, well after the election perhaps, all of those things are really weighing on the market. So let's try and get out of as many of our spreads as we can at the price that we initially put them on for. And I'll be looking for commentary in the chat room. Please let me know when you're able to close these spreads down, because I'll be using that as a gauge to let me know how many people were able to exit these trades. It's time to err on the side of caution. We've had a great year. I know it's been a little bit tough sledding since August, but we need to preserve our gains. We need to wait for better opportunities to set up. I suspect that those are going to come after the election. And I will have one trade that I'm going to be putting on Wednesday night in that video, and we'll recap all of our positions and we'll make plans for any open positions that are left. I'm going to leave you with the most important note. You must exit your Abbott 110 calls by the close of business Tuesday. We never hold over earnings. Okay? We don't play that crapshoot. We are going to exit that trade no matter what. I don't care what the loss is. The option implied volatilities are still fairly high. The bid-ask spread on all options has widened. Put that $2 limit out there and let's see if we can get filled during the day. Ideally, we get filled early in the day when the market rallies out of the gate. Thanks, everybody. I'll keep you apprised. We'll talk Wednesday night, and if there's action required, I will send out an email Tuesday evening. Good night. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.